Well, I always tell people, I tell clients, and also, when I do workshops, that really long-term care insurance is the number one best way to protect yourself, from these things. And so we end up having, when we're, thinking about nursing home or long-term care issues, there's really two types of strategies. There's legal tools, which would be different types of trusts or Medicaid strategies or VA. I mean, there's legal tools, but then there's financial tools, which would be things like long-term care insurance. And so, if you can have the financial tools, you may not need the legal tools. You may not need some of these other, things. So if somebody's young enough and they're healthy enough and they can afford the premiums, it's something that's workable in their, in their budget, then that's the best way to really protect themselves. And then they may not need our services as much down the road, So, and one thing too that we've seen with the long-term care insurance, there's been a lot of changes in the industry in the last few years. Where some companies have actually stopped selling it because everybody's living so much longer, and some of the companies are going broke because they're paying these benefits out, these policies that they had. So fewer companies are selling it, and some of the companies that still do have it out there have raised premiums on people, So it's the type of long-term care insurance you get is very key to kind of think through. And I mean, I think one of the keys is, if you're going with traditional long-term care insurance, which is basically kind of use it or lose it, you pay the premium every month or every year, and if you need it, then you get the benefits. If you don't need it, then they keep your money. But to have a company that has a good track record that they're not going to raise premiums, or that they're going to raise it in a reasonable rate. We've seen some kind of sad situations where people have paid long-term care insurance for maybe 25 years, sometimes longer. They paid it and they paid it and they paid it, and now let's say maybe they're in their late 80s and the premiums have gone up and up and up, and now they've continued to go up to the point where they can almost not afford them, but yet they know that they will probably need the benefit before too long, and so they're kind of stuck. And so that's kind of the traditional long-term care insurance. But we've seen sort of one of the most popular things that we see now is actually a more of what I call hybrid long-term care insurance. It's, instead of a use it or lose it, it's more of let's say it's either a life insurance policy or maybe an annuity. I mean, the typical thing would be a life insurance policy. So you pay a chunk of money to the insurance company, or you agree to pay annual premiums, and so you get this life insurance policy that's, let's say it's $200,000. So if you die, that money goes to your family. But what it has is a special rider on it. So if you needed care during your life, you could actually access that death benefit to pay for your care. So the good thing that people like about that is, if you need the care, you get the help. But if you don't need the care, the money's not gone. Your family gets that pot of money, after you passed away. And so those have actually become a lot more popular than traditional long-term care. But we still see clients that do the traditional long-term care too.